Good evening, good morning. I initially had made a plan for this evening to uh, review this earlier and also take care of some other stuff, but I set an alarm for a short nap that was not going to be like longer than 20 minutes and ended up falling into a really, really deep sleep. Obviously, sleeping well past my alarm, so it's about midnight and I'm doing this. So, anyways. Um, Let's review the day. I feel like I'm kind of at a crossroads because I am adding new stuff to my trading. My trading is evolving, and this is good. This is ultimately good. I spent a lot of time with that one trade setup a day with that 1 to 1 R risk reward ratio, and that really helped me just lock in my entries, lock in a method of entering and exiting that, well, primarily entering, lock in a method of entering that allowed me to have, you know, multiple consecutive green weeks, days, and months in a row. Um, but now I'm trying to find a sort of happy medium because when I was trading like that, I don't want to use the word late. I don't really like the word late or early, but I was entering late in moves, right? I was late or in a lot of these trades, and because of that, my risk was greater, but I had more confirmations, right? Um, and what I'm trying to do now is find that happy medium, that balance, more in leaning more towards that Eric style, right? How he's able to get such tight risk and great upside reward at these critical points, right? These areas of interest. Um, and you'll see today that I get quite a bit ahead of myself. And look, the cost of these mistakes are pretty minimal. My risk is very small, um, and that's what I really like about this. That's what makes me want to try to continue working on this and try and find a little bit more of a balance with this new style. Even though it is different, it is uncomfortable for me. It's much more aggressive and it's more difficult for sure. But I think in the long run, being able to enter more often like this is going to pay off. Um, so let's figure it out. Let's get into it. But for the most part, the theme of today is really just calming down a bit, not completely throwing away all of that work I've done with my old style of entries, and rather finding a happy medium between entering trades where my risk is 30 points versus 10 points. And there is a way to do that. And it's not about finding a 20-point risk. No, it's in how you're entering and what you're looking for. Um, and I feel like because I have less risk now in each trade, the loss hurts less, then I'm more inclined to kind of just jump into trades because the loss won't affect me as much. When I was trading and each loss was a big deal, it was like painful to enter a trade sometimes. I would get so tense because I was afraid to lose. And ultimately, that's what made me profitable because I was afraid to lose. I was that afraid to lose. I hated losing that much. And that's great. Um, that's how you have to be. And that's ultimately what stopped me from a lot of my impulsive trading, my over trading, my reckless trading, was just realizing, oh my gosh, I absolutely cannot lose. I hate to lose. But now it's about finding that balance where, yes, I should still hate to lose, but one loss shouldn't cost me an entire day's worth of work, right? Um, so that's this next stage. That's what I'm trying to develop. Anyways, there was quite a few good stuff today that I liked, and I capitalized on I tried to capitalize on two moves. One of them worked out nicely, the other one didn't. But ultimately, it's about really just playing this. Okay, uptrend here, downtrend here. Play this white channel, right? And I'll get into that in a bit. Anyways, so let's start off teal right from here to here. Put this here, put this here. We have this initial break, fake out. Can't take that unless you have a head stop loss. Come back up. And this is where I'd be anti-algoing, longing in the past, longing here right on this break back up, but I don't do that anymore. I kind of stopped it, and I have different requirements for anti-algo. Now we have this second break, and sometimes you'll see later on that taking this immediate second break works, and it really only gives you the best entry. Or where's an example? Right here, right? It gives you the best entry, just taking it right on that second break, which I'll explain later. But oftentimes you will get this wick retest, right? Wick retest of the teal. Same deal here. We have this wick retest of the orange. And I'll explain all of this when I get to those, but and it'll make more sense than what I'm talking about now. But this is important. This is a great entry, either right here on this blue break, but your risk is quite a bit larger. Versus we come back in, we wick rejected as resistance to teal. You short here with a stop above here, and you're golden. This would have been a beautiful trade. And let's just follow the trend, right? So now we started to build this channel with this point here. Let's change the color. And then we put it down to here, we break it, we come back up. I think I'm anti-algoing it, but we reject, which is also the rejection of this yellow trend line here that's starting to form, which comes in useful later. And now the second break, right? So you could short here with a stop above here, or you could wait for a wick retest and then a continuation lower, which never happens, and thus you would have never taken the trade, and that's totally okay. The next setup was this one here, where I was waiting for this orange channel, which was taken from here and also here. We broke it here, and look, this is my mistake. I take that second break, right? But the second break already failed on here, right? And this is such a big rejection, this purple red candle, whatever you want to call it, right? This bear candle here, it's such a big rejection. You have to be a bit more careful. I try and take this on a very tight stop. Right? On a very tight stop, you need perfect entries. The perfect entry, which I saw in real time later, is once we break back in, and then we start holding this orange. You see how here, this orange holds a support? This is when you need to buy. And this would have been like a small, I mean, this is a big candle, 25-point candle. It would have been more than enough to at least protect some. But more ideal is you just playing this downtrend, right? Nice bear spike, nice little bear flag, head, right, shoulder, shoulder. That's a great play. And right on the second break of the white channel, short here, stop here. How many points is that? What? Okay, anyway, I don't know why that measuring tool is not working. 56. It's like 15 points, 12 points. Yeah, it's totally reasonable. Oh, there it is. Yeah, 13 points. Not bad. Now here, again, is where I make a similar mistake. So here, I rushed. Because typically I would wait for this orange line to become a major support, right? But that doesn't happen here. That ends up getting... I end up just... This is where my new way of entering starts coming in, right? Because 95% of the time I would wait for this orange level to become support. And here this was the right play. And I would buy above, and that would have been great. And that's what I should have done here, even with this new method of entering, because this lacked clarity. This was not a clear entry, right? And now here, with my new method, with my old method of entering, I would have waited for this big green bar to form, and then I buy above it. Which means that I would have only got this chunk of the move. And maybe with this such a huge risk, 22 point, I mean, what is that? That's like 32 points, right? I would have gotten stopped out or hit break even here, right? But my point is that when we come down here, you see this orange channel, it's the same orange channel. We touch it. That's important to note. We touch it, we have a little wick support, and then the moment this candle here turns from red, holding support, and then shifts to green, I can long with a stop below here. And that's a 10-point stop. 10 points, and it went up, what is that, 56 points? No. 46 points. I mean, yeah, I mean, that's fantastic. 5-to-1 risk reward, right? Rather than entering here, right, with a stop below here, I'm entering here. And this is one of those, look, I don't have the same amount of confirmations. It is a more difficult, more risky entry to take, but my risk is so much less. Yeah, does that make sense? Right. And here's another example where I'm just getting ahead of myself. This candle here, we didn't even touch this orange line. This is just a lack of patience, impulsiveness, whatever you want to call it. We didn't even touch this orange line. We just barely wicked it. And then this candle went from red to green for like a split second. I longed, and I get stopped out. So there's that. This was something that, that was a frustrating loss. I know I'm definitely better than that. And then once I saw this, I was like, this is a perfect long entry. This is a perfect long entry. And seeing this play out like that felt like, okay, yeah, this is something I know I can do well with these new types of entries. This trade here, same idea of what I was explaining earlier with the wick retest of the channel, right? We get that one happens here, does not happen here unless you call this like tiny little wick here. I mean, I don't really consider that. But this right here, rejecting this yellow trend line, rejection, resistance, right? From here, rejects resistance, short here, stop above there. This would have been a great trade. And it's just this quick wick rejection. Or you can take this like first break, right? Which I personally wouldn't. I'm trying to take these sorts of entries where your risk is what? 25 to 30. I mean, it's 9 points. It's beautiful. And how far did the trade go? I don't know. That it went a lot. Like it was at 55 points. So these are the kinds of trades that I'm looking for, and it's that one of these good trades, well executed, can make up for 3 or 4 losing trades, right? And same deal here. Come up, this yellow resistance trend line, try and break out, fails with this wick, short right below it. Although your risk here would be a little larger, about 16, 17 points, but still a decent trade nonetheless. Now here, to finish off, we have this orange channel, touch, right? Kind of wedging, right, where we have this shape. And if you've ever watched Eric's videos, which I assume most of you have, then you know this from his like kind of OG earlier days, classic. But here we have this orange. The orange breaks, comes back up, fails to break down, and then we have here the second break, which if you have a stop above here, you're safe. But if your stop is much tighter, you would have gone stopped out until you had, look, the wick retest. Beautiful wick retest. Comes up, hits the wick hits the channel, goes from green to red, then you short here, 630, stop above there, it's 9-point stop loss. I mean, beautiful way to end the day, right? So that's the gist. I feel like I'm kind of at this crossroads, and that's okay. It's okay to be... I'm evolving my trading, and that's what I like. But I need to be focused. I need to have my head better in the game. Because these kinds of losses, I would not have taken these kinds of losses with my old system. Absolutely not. But I think because I'm trying new stuff, I'm getting a little bit more, weird and trying to be a bit more unique and exotic with my entries, that I'm kind of devolving into these sorts of entries because I'm still trying to find a new footing, a new more grounding. So honestly, I'm okay with it. I think it's going to be worth it, and it'll pay itself off in the long run. But for now, this is what I'm working with, and also just hopefully tomorrow, all things considered, I do have some trades that I can, that are winners, and I can work out how I'm taking profits, how I'm hitting break evens, how I'm hitting 1 hour, 5 hour, 3 hour, 2 hour, right? Because that's also something that's equally as important. That's how I'm entering, is how I'm exiting. But yeah, I think today I'm getting a bit back on my schedule. I mean, I am more back on my schedule. Today was pretty busy. Woke up, traded, reviewed, did a bit of studying, went to work, came back, reviewed, studied a bit more, tried to take a nap. I mean, the plan was that I would, go hit the gym. I haven't eaten dinner. It's midnight. I still need to eat. I haven't eaten since, I don't know, 2 o'clock, 3 o'clock. So I'm hungry. But the plan was, I'd hit the gym or swim. But I ended up just reviewing, and that nap turned into like a 3.5 hour bedtime. And it's okay. I don't need to hit the gym today. I mean, I go pretty well. Not I say hit the gym, but by that I mean like exercise, as in running or swimming. Um, and I know I keep saying this, but I have gone to the gym a few more times, but I just don't enjoy it as much as swimming. Like, swimming to me is just so therapeutic. You're in the water, and it's refreshing. And I have like pretty good stamina, and I'm able to just do lap after lap. And it's like, I don't know, it just feels better. Your body is floating in the water, and you're relaxed, and it's cool, and you have the air, and you're outside. And in the gym, it's just like these sweaty, kind of moist, and you're holding the weights like, right? I mean, obviously, like, I want to do weights, like, I want to like be strong and look strong and muscles and stuff, get muscles and stuff, which you can't really get from running and swimming. Um, but yeah, I just have to keep pushing until I enjoy it, because I feel like naturally, if you keep doing it, it's like running, right? Most people hate running when they first start, but you will like it. Like, I mean, now I'm just convinced that there's no way someone won't like running if they really try to get into it. So surely it's the same thing with lifting weights. But yeah, that basically concludes today. Um, I'm gonna call it there. Thank you for listening.